Greetings, market rebels. Welcome to this week's sector situation video. It is actually Friday, the 18th, and it's about 20 to 4 p.m. here on the East Coast, but we do normally put these out on Sundays, so we're sticking with that dating convention. Let's note a few things, and then we'll get going on this week's sector review. Here's our trusty disclaimer. Here is our trusty intellectual property rights notice. And then here is this week's stream, which I'm going to leave up. Now, this is from Macro Measure, but I usually do put it in here in case you want to take a snapshot of it and have it on another screen. Just have a quick read. Some of these comments may bleed over from Macro Measure naturally, but while I'm here, I may as well just say again, welcome. I'm Wayne, and my partner Ryan is on his way back from Venice to Newark, I think, with his family, or will be shortly. So that market outlook will be coming out on Sunday, I think, by the time he gets settled back in the States and gets that taken care of. Now, I'm recording this because I actually have friends and family that are in town. And so as a result of that, I am concerned that I would have a hard time squeaking this in, or it'd take a while, and I don't want to do that with guests in town. So I'm trying to address these now on this sort of quiet second half of Friday. And with that, I think what I'm going to do is position us with our charts, and then we'll get going from there. So let me just get rid of our little reminders, and let me just pick up our charts. And it's tough to really do this without the luxury of screen 3 there. Nope, screen 2. There it goes. It's hard to do this without the luxury of the macro discussion, but if you just want to check things out very quickly, I can understand that. The big message, I think, is that we finally seen risk off, right? So a lot of the sectors that were resistant to falling, we started to, the last week or two, I think, add some support lines because we felt like it was getting there. The main exception, I think, is your XLE, which we've been treating independently. We think that there's unique factors, of course, there, which there usually always are, that is keeping that buoyed and keeping that sector trading as it is. But if you go back and look at some of the former leaders like technology, like communications, XLI was hanging in there very well until recently, as was the XLB. Those, and even XLF, which was doing the same, and I was a little surprised this was able to hang in there. But if you look at some of the RSI readings too, we're off the lows dramatically here. You know, we were much closer to the lows right at the open, I think, in most of the major index ETFs. So these RSI readings are the result of what's happened today since then, right? Coming in with the calculation. So they were definitely lower towards 30 in a lot of cases at the lows of the day, but they look a little bit better now. But the point is, right, that really we have had a degree of risk off. We have had a degree of corrective activity that we've been waiting for in the market, and most sectors have come under that pressure, which means it's not just this sort of rolling correction. It's more of a risk offish type correction at this point. It's not extraordinary. It's not big time risk off where everyone's heading for the door. I don't want to be long anything, but it's the start of something that could end up to be that way, right? End up turning out that way. So that's what we really want to notice on the bigger picture of what the sectors tell us. I think the sectors have been very helpful through a lot of this year. But there were times when it was a little frustrating when we still had narrow leadership. Mainly we had stuff happening in the technology area and communications area, and a lot of the other things we want to see doing well in a robust economy, like your financials, like your transport, like energy. You'd see they weren't cooking right in the first half of the year. They were kind of dormant. And then as we approach the second half of the year, they all started to do much, much better. And that really improved the market situation overall in terms of, hey, there's more things participating and there's a lot better breadth readings that are happening as a result of that. And a lot of people were saying, well, that's what we need to see. And that confirms the bull market. I was a holdout, right? I'm still a holdout and a holdout that hopes to be wrong. But I just don't think that what I see on the economic front is convincing enough for me to believe that this is really the start of something bigger. And you might say, well, that all will come, and it very well may, and I hope that it will. But I just don't see it. I don't see really any signs of that yet. And I think the main argument I've been making now for, ever since the end of 2021 was that rates were going to go up. And I don't think that's good for stocks. I don't think that's good for the American consumer. I don't think that's good for the US government, US companies. I just don't think that's good, but it needed to happen. And that's after like the abuses that have gone on for the last quarter century with really interest rates. And some would say it's gone on for 40 years, but artificially low. And that's all just to kind of paper over all the other problems that no one wants to address in any meaningful way in the U.S. economy anymore, because it's a country that hides from the truth at this point, as opposed to confronting it head on. But that's a whole different story. But that's maybe one of the reasons, in a simple way, that we find ourselves where we do, where we're so dependent upon super low interest rates. Otherwise, things can really deteriorate quickly. Probably not the best way to run an ongoing concern for the long haul, but that's where the wizards and so on and so forth have us at this point. Now, getting back into sectors, we can also note that your typical, we talked about this maybe being a double top, believe it or not, last week is where it was. But even like that defensive action that was working, XLV, right, that sold off. It did not power through, kind of put that double, that M in we talked about, and then it's rolled over. We could extend this support line. We just do that just because, for the record. Let's see if it lets me, and then we'll get that in place. But even the defensive sectors like XLP has not done that well. XLU has not done that well. XLV, right, the healthcare space, which was doing, we thought we saw a little bit of rotation into that, and maybe we did, but it just hasn't been able to continue. And so everything's really come under pressure. And again, that's indicative of risk off. And so it really makes trying to find what's the next thing that's going to perk up or perk down tough, because everything really, with the exception again of XLE, has been getting hit hard. And so on that front, right, we could take a look at some things a little more in depth, but I don't think I'm going to go through each and every sector. I think I'm going to go through with a few highlights, because you can all see that you got into the lower 30s, mid to lower 30s on RSI on most of the key sectors we've been following. And when you get down that low, that's good enough for me to say, yeah, there was a correction, and some of the overboughtness is certainly gone at this point. I think the big question, there's a couple of big questions. There's one for next week, which is always, what path does the market take? In my opinion, that's always a hard call. But in my opinion, for this week, if I were forced to make one, I think that this rally that they ignited today continues. So if we use the SPY as a proxy for the market, again, people prefer this over SPX because they can actually trade the levels much more easily and use the SPY options much more easily than they can SPX. But that's if you're wondering. But anyway, this got right down to the 23.6 retracement from the lowest low in October that I could find and the recent highest high. So that did stop very close to almost to the penny, right to that point. I think there was a flat line there as well. It all kind of makes sense where it stopped. There was probably some expiration day shenanigans, all kinds of things. But remember, with Jackson Hole, I think is coming up at the end of next week, and you have the NVIDIA earnings, and those are coming up. So, or NVIDIA. So whatever the case may be, those are two items that maybe, just maybe, they'll be able to hang their hat on with some kind of hijinks, right? That they're able to put something together, create some kind of a squeeze back up or what have you. But things did correct enough that you have to say, well, where they got to on today's low was there. I mean, even yesterday, the RSI reading went out at 34.85, and you were down significantly from there. So as I said, you got pretty close to the the technical oversold level on RSI of 30. So again, I think as a result, they try to carry this a little bit more. We have to wait and see, what does it get to, right? Does it get up to the 50 fully there in gold? Does it go to the 20 maybe? Does it even go beyond? I don't know, of course, but I think they're going to try that. And then if that news is, and I don't know if how successful they'll be, by the way, but that would be my best guess. Then I think it becomes, what happens from there, and do those news items help them at all? Can they be used? If they can't, I think then you could be on the verge of another leg lower. I do think if the monthly candle ends ugly, that could really seal our fate, that we would have probably another couple of months, just like the third year of the presidential election cycle historical data or cyclicality suggests. And so you might have a rough sep and ock in terms of they're not really super trendy where we're rocking and rolling one way or the other. You're getting a little bit of both, which most people find frustrating and hard to trade. I would tend to agree with those people. But remember, we can only get right what's there. We can only extract and capture profits from what's available to us. We don't have control over that market behavior, what phase the market's in. So just keep that in mind, because I've been preaching singles and doubles until you get more of a breakdown or a breakout. And I think you did get a breakdown here, so that's good. There could be some really nice returns from folks that traded this week. We haven't gotten reports. Naturally, we get those the following week on a lot of the 2 days, I should say, this week's fresh ideas. But I think overall there was a real good chance here, just the way, if you were paying attention, that all the sectors went risk off. TNX, DXY, we covered in macro measure and other places. They were the place to really watch things, I think. And so it is what it is. But a couple interesting notes within this market volatility that picked up is XHB, right? So we did talk about XLRE. I'll bring that up too. But if you look at XHB, this has really been the one that I was astounded that it's been able to do what it did. And then usually, right, things that don't make a lot of sense to you, you get even more astounded when they refuse to break down. And so this finally did break. We did put some ideas in on the bear side and things like XR. This is recently, the last couple of weeks, XRT, XLI, XHB. We had spiders, Qs, and IWM bearish ideas in place since the end of July. I tried to make sure of that. Is sensing, right, that we really should be upon something like we're experiencing right now. So that did pay off as well. There were other bearish individual names, but at least some of those broke down, right? The XLI finally broke down a little bit as well. These are hard ones though. Like, you really had to wait, be patient. That's what happens a lot of the times when you're dealing with a strong sector. They really don't want to give it up that easily, and you've got to really bide your time. It's just not easy. But look, people want counter trend trades, and there's time and place for that kind of a thing. And we thought it was, it was when it was. Unfortunately, those names have finally started to act well in terms of cooperating with those bearish strategies that are in place there. But let's see, XLRE. Let's go back to that. So housing finally correcting. XLRE, you can see real estate finally correcting. You're now at the lowest low you've been really in about 3 months. So, or are you? I think you are. Yeah, I think you are. So you've got to go back to here to get to that low, because I don't think this, I might be wrong. Hold on 1 second on that one. I might be my visual bias. 35.84 and today's low. Yeah, a little bit lower than that one. So you're back here like we guesstimated about 3 months ago in May. But this, this is obviously not acting that wonderfully. It's broken out below that channel. As an aside, let's see if we can get the cut and hood up. Right, I haven't looked at these this week because we've been pretty busy with Ryan and his family traveling. I would say excessively busy, but you can see cut. It blew its chance, and I'm sorry, this is not hood. Well, I thought I probably instinctively cut. Went with wooden. I meant to do wooden cut, and I got hood just out of instinct, probably, or a typo. Let's see, these, I would think these were rolling over. They had their chance as well, but they just couldn't pull it off, and you could see that it was down from there. But yeah, I mean, new low there. I'm sure cut's going to look pretty similar. So we were saying this, right? Like if this housing market really is on fire and there is no effect that's double whammying the consumer, right? The home buyer with higher, very high rates relative to where they were just a few years ago, combined with extremely high housing prices, then these things should be ripping, and they weren't, right? So they were kind of hanging in there, but they weren't on fire. So to me, like this is confirmation that that real estate is out of touch. I still think real estate's out of touch with what will ultimately be reality. Once again, excuse me, I hope to be dead wrong about that. Let's take a look at the copper future. That's G. It's supposed to be a G. And where's that at? Wow. I mean, Thinkorswim is bogged, and I just rebooted here too, like just before I began recording. All right. Well, we're just going to do what we can here. I hope this thing pushes through, but we were saying, oh, maybe copper's finally showing something, but another head fake, right? So we talked about even like the value of head fakes and why like failed breakouts are such a great thing for you to keep your eyes on, not necessarily to trade copper future, but just in general. And you're not at your lowest low. We can see that, like if you go back further in time, you could see that we've been lower, but you got down there. And if this is just a little blip up and then another rollover, you could be looking at rough stuff. But again, indicative, right, not of a world economy that's on fire. And speaking of world economy, and this is not really sector stuff, but it's sort of worth a look probably, right? The wheels have really come off in the China situation. We actually have a bearish idea on this thing. Unfortunately, it's a gapper, so I don't even know. I didn't check it, but you probably had to get in just on belief rather than the trigger level on this one. But you can see how you really can't see how much China's come off. You can only see percentages. All right, let me see if I can fix that. I didn't realize Thinkorswim was already doing that because I wasn't really so focused on prices as I was just kind of behavior. Get rid of that. Boy, oh boy, this is super slow. I better think about wrapping up soon but yeah, you can see that, from 30, I guess nearly 31 it was, and now you're back down here. And that's a pretty decent move, not an incredible move, but a decent move for the ETF. I was looking at the United Kingdom, and I think the EWU was also coming off. I think you could see that, right? So there's the UK coming off, at near recent lows. So a lot of these larger economies, I think it's EWG for Germany. Let's see if I can get that one, which is, I think the largest economy in Europe, in the European Union. And let's see here. Yeah, I mean, there's your recent low, and that one goes back a decent way too, right? So you've got China, you've got the US, you've got two large economies we looked at in Europe. I'm not saying the rest of the world doesn't matter. I'm just saying that the reality is that there's not this great global economy right now, world economy, just not there. And we've seen that. The only thing that kind of bucked that, as we've said, were the oil futures and XLE. They bucked that. Like we said, we think that's really more to do with the situation that's specific to, right, that market. And the stocks are acting accordingly. And you had, I guess, high demand and high prices during the summer travel season. What a shocker. So anyway, that is what it is. There was finally a back off here. XLE had a little bit of a back off, but overall, right, if you're a bull in here, you like that you push through the 200. Every SMA that's longer term is now below you. If you can kind of bottom here and start to go again, not even go all the way back down to the 200 and test, that's only a show of strength, and that would be really a good thing if you're a bull, I think. So yeah, I think if you start to work your way back up, maybe towards that level, right about Thanks, Thinkorswim. Yeah, that's really helping me out. Let me just get that number a different way. 83-ish here on the crude would be probably a good level, given a few pennies to get ready to see things really potentially roll higher if you start to see that getting taken out again. But XLE kind of perked up a little bit here towards the end of the week. It held its gains. It's the one sector that still stands out, as a bullish sector because of how it's behaving. Gosh, and I'm going to probably end up wrapping on this. I'm actually getting a concern that the machine is just going to crack under extreme pressure. Let's see here. Get rid of this percentage and then apply. Yeah, it seems like there's a huge echo here in terms of how long it takes for me to really get anything going here. It's such a delay. But this is working its way back up off of this 20, rising 20 here in light blue. Now it's above all the SMAs again. So it's closing out pretty well. If you are a bull, right, that's the kind of corrective activity you like to see. And you like to see it the way that it's unfolding here. Nice, strong push, decent little pullback that's shorter relative to the longer run to the upside. Similar thing here, bigger gains, lesser retracement. Longer, stronger run, only had sideways corrective activity, really not even so much as a significant sort of pullback. And then you have another corrective phase here, but the push you made, right, is the prior to that is larger. And now you have this corrective phase that may have ran its course. And if it does, and this starts to work its way back up, it's got some real potential, so I think 83, and I think, if crude starts to get back above 83, the way we just charted it, this thing will go and it'll be making a new high. And so this sector still looks pretty good. It's acting okay for now. Good corrective activity. You can see right now, just the RSI is up there on the daily. It's at 62. But it's not crazy up there. It's, you're not, you got some room before you get to 70. So I still think when I look across all those views that I've got off screen, that one looks pretty solid still. And if it can start to, probably want to see it take out that Thursday high to start getting aggressive. If you're short-term trading it, use that. And probably if you wanted to give yourself a stop, right, if you're willing to wait till it takes out the 20, that's one thing. But if not, maybe the 10-day is right there. I'm not huge on those kind of things, but I know that a lot of people like to focus on that kind of thing. But overall, you really can't say much about it yet. It still looks like it has potential, and it's not too overdone in the short term or in the very large scheme of things, grand scheme of things. So I think on that note, I better shut it down. We did talk about how the dollar and TNX and VIX all made new recent highs this week, something we've been kind of harping on that was set to happen, we thought, in August. And that, of course, produced the risk-off situation that we've been experiencing here, I think, this week especially, but really starting in a bigger way, I think, last week. So I hope something that I've shared with you helps you out this upcoming week or some week in the future. I want to thank everyone for tuning in, getting this done early, as you know, because I've got some friends and family that are due into town. I've got some hosting responsibilities. And so it might have been pretty hard for me to get to this on Sunday as a result. So getting it out hopefully a little bit earlier, we'll see. But I don't have the benefit of any of the weekend news. My partner Ryan will be covering that in the market outlook overview that comes out on Sundays as well. And I just want to wish everyone a great weekend and then a great trading week next week as well. Again, thanks for tuning in. Everyone take care.